How's everyone feeling today? Good morning, Steve Diego, Ron, Rob. Nice to see ya. Hope everybody's having a great morning, feeling good, doing things and stuff. Hey, Jim. Nice to have you in here. Welcome to the room, guys. Welcome to the room, you NASDAQ traders. It has been a mess, hasn't it? Crazy, a lot of sideways, a lot of patience in the last couple days. Just waiting for the perfect trade, waiting for things to set up. Some days are like that. I had a friend used to tell me, some days you're the boot and some days you're the butt, guys. As a day trader, when you're not the boot anymore, it's okay to sit on your hands. Today is, what is today? Today is Tuesday, the 29th of October. Wake up, look up, say thanks. Everything else is extra. Man, I love that. I'm glad you reminded me of that. That's kind of how I try to live my life. Every morning I go to forexfactory.com/calendar, and my whole goal is to make sure that I'm not trading into news, that I'm not throwing myself in front of a potential reaction. I think I may have just killed my link there. Let me try that again. Try and be smarter than the internet's here. There we go. We're going to copy. Going to drop it in. Good morning, Jeffrey. That's the one. forexfactory.com/calendar, guys. Every morning I look for high impact and medium impact. And we just had the S&P composite right now, 9 a.m. That was medium impact. I don't know if it moved the market, but it certainly had the potential to. And then when we get to 10 a.m., guys, CB consumer confidence, cheeseburger confidence, as it is lovingly referred to in this room, and Jolt's job openings, guys. And both of these can move the market. Sorry. Throwing yourself in front of a potential reaction equals marriage. I like that. That's true. Guys, I don't trade the news. Let me show you exactly how my world works when we talk about news. I come in and I look at the U.S. markets because I trade U.S. markets. Good morning, Izzy. And guys, everything to the right of those boxes means absolutely nothing to me. The only thing I'm looking for is high and medium impact signs, and then making the choice to not trade into them because there may be an emotional reaction. So that's every morning. That's the first thing I do after I make a little coffee. Go back to bed. You said /calendar. You heard /catheter. That's because you're a nurse, Andy. You have the Who playing in the other room. Had to turn it down. Does that make me a responsible adult? Almost. I do like the Who every now and then, though. Guys, everything that I talk about, this is especially new users, listen in close, comes from the trading guide, right off of the Nexgen page, guys. This is where all the answers come from. This is your indicator introduction, understanding trend and direction, termination conditions, entry opportunities, high probability trades, management. I mean, everything that I talk about in this room, you can find it here in the trading guide. And then my focus every day, each and every day, same thing over, guys. I am the most broken record that you are ever going to meet. If you're on day 1 or you're on day 101, you get the exact same message for the first hour of my classroom, guys. And it's all about a high probability trade. Because a high probability trade, listen to the description. It's going to give you warm fuzzies. Is a trade when each indicator on every chart agrees for the rules for the trade, guys. This is when your triggers are the strongest. This is when there's no termination conditions and there's no trouble spots between your entry and your target. And guys, this is the best of the best. And the way it's taught each and every morning, this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. And most importantly, this is a trade that's going to teach you to read your indicators. It's going to teach you to look at your charts, understand advantages, and then it's going to help you be willing to pull the trigger when those advantages come together for a trade. And I do this every morning, same thing. One of my favorite cliches, guys, and it's probably going to be on my tombstone, is that repetition creates recognition. And the more you see something, the more you hear something, the more you do something, the more it sticks. So the way I teach this room is very basic. I take this very high probability trend trade and I break down each rule individually. We talk about what it looks like, I talk about how to study it, and I talk about how to piece it together to create the highest probability trend trade that you can take. This trade is your first trade, guys. And it's your first trade because you need to be a chart reader. It is not your only trade. Once you're comfortable with this trade, you're going to be absolutely floored at the opportunities that present themselves. But if you are hoping that the market's going to go up because you see something green, or you're wishing that it's going to go down because you saw a flash of red, guys, you're going to struggle. But once you become a chart reader, you're going to understand where the market is most likely to continue. You're going to be able to use that spot to enter, not only for the highest probability trend trade, but for other trades that you're looking for. You're going to understand where the market is likely to go, and this is going to make you look like a rock star in your management because you're going to understand exactly where momentum is likely to push the market. You're going to be taking profits there rather than giving it all back, hoping things keep going. And that takes us to, you're also going to understand where the market is likely to stop. Likely to stop areas, termination conditions, guys. These are the big ugly lines on your large chart that can stop forward progress. You're going to be able to identify them. You're going to be able to recognize them as termination conditions. And you're going to be able to make the choice not to trade into them, guys. So we're going to focus real heavy on this highest probability trend trade. Let me get my laser pointer here. Pew, pew. Because it's only 3 rules. And guys, let's be honest. When you start day trading, it's a little daunting. You're like, oh my gosh, there's so much freaking information going on. But we're going to try and break it down to the bare minimums. So we're going to talk about 3 rules. The first 2 rules are pretty universal for your trading plan, guys. The first 2 rules, strong triggers, no terminations, is going to give you the advantage of momentum and a clear path, guys. You are a freight train, loaded down, 100 miles an hour, nothing in the way. And these 2 advantages are the 2 that are going to carry you to a lot of situations. So I'm going to encourage you, focus on learning your large chart rules first. Focus on understanding momentum and a clear path, and you will find a way to capitalize. Initially, your 3rd rule is the entry for the highest probability trend trade, guys. Your 3rd rule is defining exactly where the market is most likely to continue. So we're going to break each down and see what they look like. And we're going to follow these rules on 2 charts. That's it. Are there more charts? Absolutely there's more charts. Do you need more charts as a brand new user? Absolutely you don't. It's only going to confuse you. So we're going to use a large chart. Large chart's going to lead the way. It's a very broad stroke of a brush. It's a slow moving chart. The large chart will define the direction of the market, which direction you should be trading to take that highest probability trend trade. The large chart will make sure that you have the momentum that you need, that advantage from rule number 1, and it'll also define the areas and make sure that you have a clear path and room to your profit targets. Once the rules are met on the large chart, we turn our attention to a smaller, faster chart, guys. This is an entry chart. This is the chart that you go to when the rules are met on the large chart. This chart is like the siren song. And you are going to want to look at this chart before you have these advantages. Resist the temptation, guys. Rule number 3 happens when rules 1 and 2 are met. And we're going to use this refinement chart to really just pinpoint where the market is most likely to continue. This is going to be your entry for the highest probability trend trade. This is going to reduce your risk, and it will maximize your profit potential by waiting for these pullbacks to areas. That's what rule number 3 is going to do for you. We use the 2 charts because there's really 2 forces in the market, and this is very layman's terms. Guys, there is the large crowd that makes everything happen. Direction, trend, momentum, they react to key areas. There's the small crowd that fights them and fails a lot. We're going to use that one to pinpoint your entries as you trade with the large crowd. So, my first hour every day, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. Good morning, Zorro. And I say for when it's okay to trade because, guys, your focus has got to be on following the rules. Because when you follow the rules, you're trading a pattern. That's all it is. And this pattern is repeatable, it's testable, and it has been proven to win more than it loses. So we're learning to recognize a pattern. I want you guys to simulate, to practice, to get in and out of the market, to really take every trade that you think you see. But what I want you to do is I want you to talk about those 3 rules every time you take a trade, and I want you to talk about it on your chart. So I'll take a picture. I'll talk about the momentum from rule number 1, whether I had it or did not. I'll talk about whether or not the path was clear, or if I was trading directly into an area that may stop the market. And I'll talk about my entries, guys. And every time you do this, every time you drop this picture into the room, what's going to happen is we're going to have a private session. You're going to simulate, you're going to post, and we're going to talk about everything that you see, because my job and my goal is to make you a chart reader, is to get you to the point to where you can look at your information and say, wow, I do in fact have these advantages, it's time to take a trade. Or sometimes, even more importantly, my advantages aren't present. I choose to sit on my hands rather than hope the market does what I want it to do. So we're going to go really into this. We're going to break them down, individual looks. We're going to see it in the live market. You guys are going to become very comfortable with it. You will make mistakes in the beginning. I encourage you to make mistakes in the beginning, because you will learn from those mistakes as long as you receive feedback, if you know that you're doing something wrong. And eventually, the goal is that you never practice the wrong rules or take the incorrect trades, because the correct trades have been proven to win more than they lose. We're going to simplify this morning. 3 rules, 2 charts, and we're going to talk about a high probability trend trade. The high probability trend trade, your foundation trade, the beginning, the stepping stone in your journey, is going to open the door for more and more trades. I'm also going to introduce you towards the end of it to what we call a medium probability trade. And a medium probability trade, I just like the way that sounds. It's defined as when most indicators line up for a trade, however, a small issue exists. I want you to embrace issue rather than issues. There's one thing wrong, and I'm going to identify it as being wrong, and I know that I'm going to have to work through it a little bit. And guys, this will be the vast majority of your trades. When you're executing medium probability trades, you'll take these trades and manage them assertively. Your ability to read charts will allow you to manage them assertively. If there's trouble in your way, your ability to read charts will identify it. You may take a portion of your position off at that trouble spot, reduce your risk to a 0 loss level, because we're playing without at least one of our advantages, guys. So we're going to simplify. My hope and goal is that you learn these looks. Again, repetition creates recognition, so that they become easy. And that's the second piece of becoming a confident trader ASAP. Guys, use this spreadsheet. Did you hear my voice crack? That was awesome. Nexgen gives you this every time you download software. If you're on a demo, if you reload your indicators, guys, you have this spreadsheet, and it's just a trade journal. I'm only going to talk about one tab. There's the client trades, guys. This is exactly what it looks like, the sequence to get into a long or a short high probability trend trade. There's a very mechanical management plan. There's almost 400 pictures of people using the software, embracing the advantages. Guys, there is patterns that you're going to begin to recognize as you get good at reading your charts. This section right here is what creates recognition. You'll create it faster and more effectively if you turn the favorite look section and make it look like the one that I've done for you in the client trades, guys. This is where every time you take a trade that fits the rules, put it in the green section. As you learn to manage those trades, start filling out your orange section. When you begin to see things, hey, this happens all the time, and here's the result. Drop it in your patterns. And guys, respect those termination conditions. That is the most broken rule. And that rule number 2, those termination conditions, are the one that are going to keep you the most patient. So, without further ado, guys, we're going to get going, and we're going to break this down. I'm going to keep hydrating. We're going to start on the large chart because the large chart leads the way. Do not let the small chart talk you into taking trades if the large chart isn't saying that it's time, guys. The large chart, rule number 1, says that it must have strong trigger lines. Strong trigger lines give the advantage of momentum. So when we're talking about large chart, guys, the first thing and the easiest thing that you're ever going to recognize is which direction you should be trading. If the background on the large chart is green, you're looking for rules to be met for high probability trend trades long, going up. If the background is red, looking for rules to be met for shorts to go down. In an uptrend, in order to have strong triggers, your small triggers must be up and above the large triggers. The large triggers need to be widening. And that space between the two, guys, this gap, it looks like scissors that are opening. That gap, that space lets me know that the odds are favorable for the market to continue down, or up, excuse me. And in a downtrend, smalls below the large, larger widening, space between, scissors are open. The gap between the two lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, OFM, you're going to see it on charts all day long through people's annotations. When I have strong triggers, this is the best of the best time to buy Fibonacci support on a smaller, faster chart, or to buy Fibonacci resistance on a smaller, faster chart. On your large chart, that one single slow moving bar, nothing's going to change. You're going to see these tails. You will be able to pinpoint where these tails are most likely to form, guys. This actually is a potential entry for a high probability trend trade, long or short. You're going to see that retracement on a smaller, faster chart, but you're going to use these tails to study. What you really need to learn, to recognize, to believe is that when I have strong triggers, the market is likely to continue in the direction of the trend. It takes strong triggers to have an advantage as we try to break those key areas. And guys, strong triggers will even cover up some of the mistakes or allow you to take a little more aggression into your trades because the momentum is simply hard to stop on such a large chart. But you can actually see it when it slows down. As your scissors begin to close, and then when those small triggers finally work their way inside of the large triggers, this is a weakening of the large triggers. This is a visual representation that your trend is slowing, that your advantage of momentum is gone. And guys, these anything can happen triggers, that's what we're going to call them, ACH if you will. Weakness means anything could happen up or down. It means that the market may retrace a little bit from the middle of nowhere. It means that if it's at a key area, the key area is more likely to hold. So as a brand new user, my hope for you is that you embrace the idea that strong triggers should always lead the way, that strong triggers is the reason that we're looking for the trade. And guys, strong triggers pushes a market. And the easiest way to never mess this one up is to go take some pictures, right? And look at this. We have strong up and we have strong down. I want you to create a connection between the look and what it is. So the smalls are above the large. The scissors are open, right? Let's use keywords. This is odds favorable momentum. This is rule 1 met. And guys, this is absolutely textbook perfect. Everything I look for in strong triggers. And then right here, we have it the other direction. Smalls below large. I need more room here, don't I? Scissors open. Odds favorable momentum. Rule 1 met. Guys, this is your look each and every time. And then look at this, down at the very bottom. We can define this as well. Smalls inside large. Scissors closed. Anything can happen. Rule 1 not met. And guys, does everybody see the bounce? Does everybody see the retracement that might have taken you out of a short position? Guys, these looks right here, these are where Nexgen users are absolutely capitalizing on this momentum. This is your high probability trend trade look. So if you take this picture every day, go back and take a few of them, go to the 101 tab. And what you're going to do is you're going to start putting these individual looks into the tab. And you're going to say to yourself, this is Rule 1 met. And now you have a study guide. And guys, on that same picture, we had what it looks like to not have Rule 1 met. So make sure you're filling that one up as well, because what we're doing is we're creating recognition through repetition. And the look never changes. Momentum will always be momentum. Weakness will always be weakness, no matter what chart you're looking at. So your job is to not only recognize it, but learn to believe it. Learn to believe that this is your best of the best look. Are there any questions about odds favorable momentum, about strong triggers. This typically is the easiest lesson for most users. Strength pushes a market, can break key areas, guys. So we have to identify the key areas. Once momentum is there, I need to make sure that there's no termination conditions. None of those likely to stop areas, because my goal is to have room to my profit target. And if I have room to my profit target, if there's no termination conditions, I have a clear path. This is my second advantage. I'm going to couple clear path with momentum before I ever look for an entry area. Lines on the large chart? Sure, Nanda. Separation is the easiest way to think about it. When the background is green, remember yesterday's lesson, Nanda? That when the small triggers start to break above the large, that's what paints the background green. That's what identifies the trend up. And then when the small triggers break away from those triggers, this is your look of momentum. This is just two moving averages, and that small accelerating away from the large, it's a visual representation that the market is picking up steam in the direction of the trend. So as long as there's space between the two, you have the best look to buy Fibonacci support, to sell Fibonacci resistance. And what happens is that there's like a progression, if you will. Separation is the best of the best. And Nanda, this is what we're looking for as brand new users. This is the one that pushes the market. This is the one that can cover mistakes, that can break key areas. And then as you grow with the software a little bit, you'll actually learn to use these trigger lines, and you'll be able to say to yourself, the trend is strong. And then when one of those lines works in, you're going to say, whoa, things are slowing down. This is the vision of the slowing. Notice that the scissors are closing. And you still might find opportunities as you grow with the software, as you begin to recognize things. And then once those smalls work their way inside, your advantage is gone. The momentum is gone. You are trading without momentum. And guys, when this momentumless look reaches key areas, these are where Fibonacci areas are more likely to hold. So Nanda, the look is 100% consistent on every chart, any situation. And that's what this 101 section is for, guys. If you're working on these things, go take some pictures. Go take some pictures. Because the look is always the same. All you have to do is commit it to memory. And then we got to make sure that we're not trading into areas. What are areas? Areas are lines on a large chart, guys. These are the areas where the large crowd is most likely to make decisions. These are the areas that have the potential to stop the market, that have the potential to reverse the market. These are the areas where buyers buy and sellers sell. And guys, these are the areas where fights happen and consolidating markets fall in between them. You know about them long before you ever get to them, guys. You're going to see them on your chart. You're going to see them in the distance. And you're going to say to yourself, man, a decision might be made here. So what you're going to do is every time you see a line, to start the process, to identify it as a termination condition, price must reach an area. And this is why I use the phrase, decisions are made. Decisions are made at key areas. So if price doesn't reach a key area, guys, and you're in a trade, that's a target. But once price hits that line, whether it's resistance or support, whether it's a divergence high or a divergence low, whether it's a 1-to-1, guys, once price reaches the resistance, decisions may be made. You don't know if they're going to be made. You'll never know. But price reaches resistance. The only thing you guys have to do is ask yourself, where are my triggers? Pretty simple, right? Price gets there, where are my triggers? If they're still below resistance, this is a termination condition. It may reverse the market. It might create an untradeable bounce. It could produce a full reversal. Remember, all we're doing is we're trading patterns that have been proven to win more than they lose, and we're avoiding patterns that have been proven to cause you to lose more than you win. And when you reach an area of resistance and the triggers are below, more often than not, this is going to ruin forward progress and take you out of your trade. Same is true here. Price reaches Fibonacci support. All you have to do is ask yourself, where are my triggers? If your triggers remain above support, guys, This is an area that may stop the market. This is an area that could reverse the market. This is an area that has the potential to create an untradeable bounce. Your advantage is no longer there. No trades into the areas. Guys, this is the most basic look at termination conditions. My triggers didn't break. Here they break. They don't break. Right into support, right back to resistance. And guys, look at the untradeable bounce the divergence low makes. And what happens is you're going to go back and you're going to begin to trust this look. And you're going to say to yourself, when I've reached a line and the triggers haven't broken, it's okay to sit on my hands. It's all right to do nothing. Areas break all the time, especially with momentum, but they hold more often than they don't. So when is the area broken? Go through the recipe every time. Price reaches Fibonacci support. Where are my triggers? My triggers are still above right here. No trades into the area. And then you play if then. If my small and my large triggers get below support, support will be broken. It'll actually behave as resistance more often than not. I'm going to look for my rules to be met because I have momentum and a clear path. And guys, that path remains clear until you reach the next area. And then the market reverses with weak triggers. It hits Fibonacci resistance right here, and the triggers remain below. And I want you to see this. It's still at that Fibonacci resistance, and the triggers are still below. Guys, you have a termination condition for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 15 bars where the path is not clear. And then once the small and the large get above resistance, resistance begins to behave as support, and your path remains clear until you reach the next area. So guys, areas break all the time. They typically break with momentum. Look at that. Momentum, momentum, momentum. And then when there's weakness, we start to see those big bounces right at the areas. So can you guys give me a Y in the room if you're good with this? Price reaches, where are my triggers? If they remain below resistance, above support, let's just sit on our hands for a minute. One of the things that it's impossible. I've never seen anyone do it. You can't predict what the market is going to do, but what you can do is learn these looks and have an understanding of what it's most likely to do. Once you're good at terminations, once you understand clear path, sets you up for the second trade. And this is that area in the middle. Areas break all the time. And when your small triggers absolutely smash through an area and you have that odds favorable momentum, guys, this is the potential for the area to break. This is that in-between stage where the path isn't clear yet. 50% of my triggers break through, but 50% are not. This is the 50-50 trade. And the 50-50 trade, if you take an entry, you're taking an entry based on the potential of the area to break. It's not a clear path. And because it's not a clear path, rule number 2 isn't met. And because rule number 2 isn't met, it can't ever be a high probability scenario. Guys, this is your second trade. This is a medium probability scenario. And I want you to see something. The small smashed through, but the area didn't break. The small smashed through and there was a huge retracement. Guys, you're going to take a lot of 50-50 trades. Look at that consolidation. Yesterday was absolute garbage. Rule number 2 kept you out of a consolidating market. I'm going to give you a plan to help you know when you have the highest chance of success to take these medium probability trades. But what you're going to find is very often they don't break, they create a larger bounce. I'm going to give you a plan that lets you know exactly what it looks like when that's likely to happen. So we're going to start off, hey, good morning, Sid. We're going to start off using basics, simplicity, not overthinking it, not looking for everything, but rather looking for the best. So when price reaches an area and the triggers don't break, we're going to say it's not broken, no clear path, no trade. When the smalls and the large get to the other side, we're going to trade away until we reach that next area. And then guys, this 50-50 look is going to identify the potential. These are the 3 options every time you reach an area. Learn them. Learn to believe them. And understand that there's going to be times when your path isn't clear because the areas are stacked. It may be support after support after support, or resistance after resistance after resistance, guys. This is 90% of your day. The futures markets trade billions of dollars every day. You know, I need to actually amend this because we went back as a class the other day. The futures markets, Forex markets, guys, they average $220 billion an hour. It's trillions every day. I was mistaken. You don't have to be in every move. Every tick is not your tick, guys. Every move is not your move. Every run is not your run. The goal is to be in the moves with the highest chance of success. The goal is to be in the moves with the least amount of risk. The goal is to be in the best of the best moves. So if you have support, followed by support, followed by support, it's cool. Go make a sandwich. Wait for it to break. Wait for it to roll, guys. You don't have to be in every move. In Fibonacci, guys, this gives you the ability to see where the forces, the driving forces of the market are likely to make decisions. And very often, rule number 2 can keep you out of consolidation and chop. And 90% of your day is spent reading indicators. 10% of your day is taking advantages. And let's go back and look at the S&P yesterday. This was the S&P yesterday. Termination, and then weak triggers on a break. Potential to break, termination, no momentum, termination, 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 over and over and over. And guys, rule number 2 kept a lot of you from trading into areas hoping they would break. Don't have to be in every move. So I have momentum on the large chart. Large chart leads the way, guys. My large chart is going to define direction. My large chart is going to define areas. My large chart is going to define my entry. My large chart has me trading with the large crowd. And when the large chart says look for an entry, when the large chart has momentum and a clear path, I'm going to turn my attention to the smaller, faster chart. And guys, we're going to be precise over here. We're going to look for areas inside of triggers, and you're going to pinpoint exactly where that small crowd is most likely to fail, exactly where the market is most likely to continue. But there's one more termination condition that I have to talk about. 3 divergences. What's divergence, Mark? Divergence is a loss of momentum. That's all it is. If the market goes down and up, creates a pivot, right about here on the 3rd bar, your software is going to run a calculation. And if that calculation says, hey, guess what? You're losing momentum in that push down, you're going to see this cyan line from a low, and you're going to see this magenta line from a high. And guys, this doesn't happen till like the 3rd bar down. But if I see 3 of those bars print, 3 of those cyan lines print from a low, 3 magenta lines from a high, this loss of momentum, these 3 divergences may terminate the trend. It may create an untradeable bounce, maybe signaling the beginning of a fight. This is the only time on a smaller, faster chart where rule number 2 isn't met. If you have momentum and a clear path, 1 divergence shouldn't faze you in the least bit. If you have momentum and a clear path, 2 divergences shouldn't make you nervous. If you have momentum and a clear path and you have 3 divergences, that's where you have to say, my advantage is gone, my rules aren't met, I'm going to choose not to trade until it breaks. And guys, if you don't see that, let's define entry. Let's use it with precision, guys. Let's get in there, and we're going to be so good at what we do that we're going to use a limit order. We're going to wait for the market to come to us. And we're going to use that limit order, write it in area, fibs, midbands, and yellow 1-to-1s. And we're going to buy that little retracement, that pullback that's created by the small crowd. And the thing that I want you to really embrace the language on, embrace seems to be my word today, is that those areas are inside of what we call favorable large triggers. This classroom, this first hour is designed to give you the highest chance of success, the highest probability entry, guys. Favorable large triggers is the best of the best, especially for the new users. Favorable large triggers means that large and synthetic triggers on your entry chart, that smaller, faster chart, are overlapping one on top of the other. Thank you for that, Cindy. Good morning to you. When my large and synthetic triggers are one on top of the other, guys, The area where price is most likely to return on that pullback is very concise, because one of the truths is that price returns to large triggers. It'll do it on your small chart and it'll do it on your large chart, guys. Price returns to large triggers. I'm going to pull up both charts and see if we can find a real world example here. Here's my large triggers going down. Price pulled back to them, pulled back to them, pulled back to them, and then when it broke away, it sucked right back to them. And you see this over and over. Price returns to large triggers all day long. So we're going to let these triggers define where price is most likely to return. And then we're going to use areas inside of those triggers, fibs, midbands, and yellow 1-to-1s, to determine where that bounce is most likely to happen, guys. The lines inside of triggers are like brick walls and you're throwing a tennis ball. So when you look at your small chart for entry, I want you to go through these words in your head every time. The small chart price may return back to the large triggers. I have 1-to-1s and a fib inside of these, and those may produce a bounce. So I want you to create that separation between where it may return and what it may bounce off of. The synthetic triggers are the large chart large triggers, and the large chart may retrace back to these. And guys, just a heads up, the large chart price and the small chart price are the exact same market price. We're just determining where those bars may return. There's a midband inside of these synthetic triggers that may produce a bounce. So what you're training your brain to do is say that price may return to triggers, but it's most likely to bounce off of an area. So we'll use the areas inside of triggers to determine where it's most likely to continue. And this becomes your window, a window of opportunity, if you will, from the highest point of support to the lowest point of support inside of favorable large triggers. Guys, you're going to pinpoint with amazing accuracy where the market is most likely to continue. So let's go through that process one more time. Let's do it from the spreadsheet. I like doing it different every now and then. Strong bottom, what does that mean? That means that one of those no triggers through terminations reversed the market on the large chart, guys. The decisions made by the large chart, by the large crowd, were so impactful that the triggers couldn't break and the market reversed. This is the precursor for the highest probability trend trade you can take. Smalls are above the large, wide, scissors open, odds favorable momentum. Guys, I'm using the most current bar to determine my rules are met. Can you give me a why? If you're comfortable with the momentum look. Does that make sense? Separation, scissors open. Guys, this is strength. You want to be able to recognize this in a fraction of a second. At the top of this bar, I have not reached Fibonacci resistance. I have not reached an area. Therefore, I do not have a termination condition. My path is clear. Guys, this is your large chart read. This is what it looks like before you look for a long trade. Once I have this, it's time to look for an entry. So I'm going to go over here. Everything is screaming up, guys. I'm going to start looking at my triggers. I'm going to start looking at the areas where they line up. And guys, I'm not scared of this fib because areas are defined on the large chart. Once I have this look and it's time to go, I have to wait for a reversal bar. The reversal bar signals the beginning of the pullback. The reversal bar signals the beginning of the fight coming on by that small crowd. Guys, the reversal bar is not my entry. Rather, this bar right here, this bar closed to the downside. That's what creates a reversal bar. It's on the wrong side of the momentum triggers. This is a little loss of momentum that I'm hoping pulls me back to my best of the best area. So the reversal bar sets off the process of picking out your zone. Once I get the reversal bar, I'm going to look for my triggers, large and synthetic. Sometimes the large are on top of the synthetic. Sometimes the synthetic are on top of the large. It doesn't matter. Small chart price may return to the large. Large chart price may return to the synthetics. This white box represents where the bars are most likely to return. The trigger lines are not my entry area though. I have to define my window by recognizing the areas, fibs, midbands, and yellow 1-to-1s inside of favorable large triggers, from the highest point of support, which happens to be a mid-band, to the lowest point of support, which happens to be yellow 1-to-1s. And guys, this box represents the point where the market is most likely to continue. This box represents the point where the small crowd is most likely to fail. And this window sets off activating a limit order. And my job, once I define this window inside of favorable large triggers, is to put a limit order, tick or two above the highest point of support. And at this point, I will wish, hope, wait, and pray that the small crowd gets here, because there's nothing else that I can do. I have identified the trend and I've chosen to trade with it. I have identified the momentum and chosen to trade with it. I've identified the clear path and I'm excited to trade with it. And I have pinpointed the bounce spot. And because of all those advantages on the large chart, guys, I'm going to get in at the highest point. And this is your entry for the highest probability trend trade. And it looks the same when it's a high probability trend trade, guys. One divergence doesn't worry me. Momentum is established on the large chart. Small triggers turning against me doesn't faze me. Momentum is established on the large chart. And guys, because of all that momentum and a clear path, your limit order goes a tick or two above that highest point of support. This is a pattern that repeats itself on every market. Anything below the triggers, anything below the point where the market is most likely to return, anything outside of that window of opportunity, ladies and gentlemen, is not a part of the equation. This Fibonacci support is not in the window because it's not inside of favorable large triggers. And when you're looking for a short trade, your window is the area inside of favorable large triggers. Any line beyond those triggers, on the wrong side of those triggers, I love to say that. Guys, this is outside of the window. This is not a part of the equation. And those areas beyond the triggers are what we're going to call where the market should not go. And your ability to pinpoint these entries on the highest probability trend trade defines precisely where the market is most likely to continue, which sets you up to understand exactly where the market should not go. And this is going to be your first stop placement. 4 or 5 ticks beyond those trigger lines. And guys, you're going to get hit. You will get stopped out every now and then. You're going to take the perfect trade with every advantage. And they're going to come get you and they're going to stop you out and you're going to be mad as hell. But then you're going to say, wait a minute. I had momentum and my path was clear and my entry area was clearly defined. And I had every advantage I need to take a trade that wins typically 70 to 80% of the time. Well, it only makes sense that 20 to 30% of the time they're going to come stop me out. That sounds like a cost of doing business. That's a normal part of a positive equity curve. But the great thing is once the market confirms the trade by making a down bar and a short or an up bar and a long, guys, you're going to reduce your risk and you're going to move your stop behind that bar. So even if the small crowd changes direction on you after a reversal bar, it's not uncommon to see Nexgen users giving up 30 or 40 bucks instead of that 2 to 3, 400 way out here in the middle of nowhere, just hoping the market goes up. So that's your best of the best, guys. This is the best case scenario. Letting the large chart define direction, momentum, finding an area inside of favorable large triggers. Guys, when the large chart says giddy up and everything's cranking, your entry very often coincides with those tails. This tail on the large chart is all of this action on the small chart. This is going to be your study tool. Every time I see rules met on my large chart, I'm going to go back and circle a tail. And here's the deal. If I circle a tail on the large chart, I think we had some examples. Let's go check it out real quick. If I circle a tail on the large chart when my rules are met, odds favorable, absolutely nothing in the way, haven't reached resistance. What does that tail look like on a smaller, faster chart? Well, it pulled right back to a mid-band twice, and it never got to the wrong side of those triggers. Guys, this is an opportunity. This is not favorable large triggers. This is not the best look. This is not the ideal short. And what you're going to find is that very often you don't have the ideal look. And guys, that's just a part of it. I teach the best of the best first because I want you to have the highest chance of success. The reality is that this trigger look is not always the look. Very often, just like we saw live, you're going to see this discrepancy between the small and the large. You're going to see this separation, this split. Has anybody looked at this and said, wow, where the hell do I get in? I have. So we go back to the very basic lessons, guys, and this is why I say the same darn thing every day. Price may return to the large triggers. Price may return to the synthetic triggers. I never know. But I know that these are my two options. I know that price might bounce off of a mid-band, but price may also bounce off of support down here inside of the triggers. I've got 2 bounce points and 2 correction points. And I know that no matter what, my stop goes below the triggers. Is everybody with me so far? Is anybody cool putting $500 risk on a trade? That's a lot. This is where you can use the idea of the confirmation bar, the reversal bar. And the words that I'm using when I use this is, hey, my entry is not perfect. My rules are met on the large chart, but my entry is creating way too much risk. It's not perfect. I'm going to insist that the market confirm the move. I'm going to insist on a reversal bar in the direction of the trade because this establishes my risk 2 ticks below it. And I don't have to hope it goes up. It's already told me that it's going up. And guys, when you see this look, when the large chart gives you everything that you need, a reversal bar helps confirm. This one didn't work. This one got stopped out maybe. And you had to take it twice. And that's a part of trading. Sometimes you have to take a trade twice. Let's go back and see. And the S&P is probably the wrong market to be looking at because it was rough yesterday. But there it is. Right to the mid-band. Right inside of the triggers. Your initial stop was all the way down here. But once it started going, your risk was virtually nothing on that trade. And now let's go and let's take a look at crude oil. We'll go back to 7 a.m. And what do we think about this? Tail, 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 all of them with odds favorable momentum. Support inside of triggers, support inside of triggers, support just above the triggers, inside triggers, inside triggers, inside triggers. And guys, the thing that I want you to notice is it never got to the wrong side of those triggers. The market never broke below those triggers. Odds favorable momentum pushed it up directly from a termination condition all the way to the next termination condition. This is where you're going to find your opportunity, in between the areas when the momentum is strong, guys. And that's what we talk about every morning. Every morning, guys, same darn thing. Every morning, breaking it down into 3 rules. Letting those 3 rules happen on 2 charts. So we've learned the trigger line and the Fibonacci rules for when it's okay to trade. You guys are going to simulate. You know that you have 15 hours every week to post your trades in the classroom, to get feedback, to understand what you did right, what you did wrong, to recognize advantages. We're keeping it very, very simple. We're keeping it focused. Get good at one thing before you try to find all the other things, guys. And this is where I start giving you stuff. The first one's Chart Reading 101, right on the wrong screen. Here we go. What I told you, guys, take pictures. Pictures are more effective than trades for the brand new user. Taking pictures of strong triggers, reminding yourself, annotating this is exactly what it is, what it looks like, why it's true, what rule it pertains to. Take 25 strong, take 25 weak, guys. Drop them into the spreadsheet. I've got everything on the wrong side here. Drop them into this spreadsheet. Strength, weakness, clear path, terminations. Understand the difference between the rules being met, green section, and the rules not being met, red section. And what's going to happen is you're going to get very efficient at talking to yourself in terms of advantages every time you look at your chart. You're going to get very efficient reading your indicators quickly. So go through this drill. I have been presenting this for the last 3 months, maybe 4 months. Has anyone in here taken 25 pictures of strong triggers, annotated them? Weak triggers, terminations. Has anyone done this drill? You don't have to answer. Answer yourself. Guys, if you're struggling, if you're not reaching your goals, if you're trading into termination conditions, if you're screwing up momentum and you don't do this drill, shame on you. That's right, I said it. Tisk tisk. You're robbing yourself of a great tool. I know you have, Pete. That's why you make 15 grand a day. But Mark, I'm brand new. How could I possibly know what it looks like to have strong triggers, weak triggers, terminations? Guys, I'm giving you this one as well. This is a high probability trend trade checklist. This is actually a checklist to put you in the best case scenario. It starts with a strong top or bottom, that termination that reverses the market. Guys, this one's not mandatory. You can take a high probability trend trade without it. This is the look that adds warm fuzzies for anything that happens after it. There's your strength. There's your weakness. There's your termination, potential, clear path. There's your window of opportunity, exactly where your limit order goes, exactly where your stop goes, everything that you need. And then guys, the second page you should print out, put on your desktop. This is my high probability trend trade. Nobody's ever followed this list. 4 yeses and done worse than 70%. I've had some pretty smart engineers back tested over the course of a year and end up around 83%. That's a pretty good win percentage, guys. I'm going to give you this as well. And then I'm going to give you my favorite. This is the KISS plan. The KISS plan is designed for the new user. It was designed actually for a very experienced user that was struggling. But for the new user, guys, this is a stepping stone in your learning journey. This is your first trade, not your only trade. And it's designed to optimize your chances of success with the high probability trend trade as a new user. Why? Because the high probability trend trade wins more than it loses. Because the high probability trend trade creates confidence. And because the high probability trend trade teaches you to read your charts. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you can read your charts, you're going to see things. You're going to find opportunities. You're going to see them clearly. So don't fight the large chart. That's the simple plan for consistency. Don't trade into those areas. Don't fight that momentum. If you can do that from the get-go, you're like 70% better than the average trader. Define your entry, because great entries create manageable trades, guys. Define your entry where the market is most likely to continue, because great entries create manageable trades. I can't say that enough times. Great entries let you pinpoint exactly where the market is most likely to continue. Great entries show you exactly where the market should not go. And this is your first stop. And guys, with this KISS plan, your management is every bit as mechanical as your entry. It's nothing more than if-then. And guys, it's designed to reduce the emotional factor and just get you used to being paid. You will craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, when you start to see patterns, you'll manage differently. In the beginning, management is going to be the most terrifying part of what you do, because the entries become easy with just a little bit of study and a little bit of feedback. And it's not uncommon to see you guys nailing the perfect entries inside of the first week. And then once you nail those entries, guys, I watch you move stops and targets like you are just, I don't know, hyped up on the Mountain Dew. Because you get scared of losing. You get afraid to give it back. And this first management plan and the KISS plan is designed not only to remind you exactly where your initial stop needs to go, but you're going to learn to accept that there's no reason to move a stop until that market gives you a reversal bar. You're either going to get stopped out or you're going to get that reversal bar in the direction of your trade. And guys, if you get the reversal bar in the direction of the trade, your first stop movement is 2 ticks above that reversal bar or 2 ticks below it in a long trade. And this is where you have to sit on your hands. You have to do nothing. You have to trust your stops, guys. You're either going to get stopped out for a tiny little loss, no big deal, or it's going to go to your first target. And your first targets are predetermined in the KISS plan. Your first target is $100 away from your entry. That's it. 8 ticks on the S&P, only 10 ticks on crude oil. And if you hit that first target, guys, that's $100. And $100 is pretty cool. I would never step over a $100 bill on the sidewalk. $100 creates confidence because now the methodology just paid me. The $100, it just, man, the sweaty palms go away. The adrenaline starts to subside. And guys, you're going to move your stop to break even here in the KISS plan. Break even is not the best stop, but you will craft a plan tailored to your personal goals based on your ability to read the indicators. This stop right here, guys, this break-even stop, money in the bank, that is designed very purposely to remind you that you wouldn't be in this trade if it wasn't for odds favorable momentum to the downside, that you would never have taken this entry if you didn't have a clear path to your target. So that break-even stop, guys, what it does is it gives you the courage to hold on for your second target. And that second target's only $200 in the distance, guys. And if it hits the second target, you'll be out of the trade. But Mark, the market kept going down. Who cares? You made $300. But man, it went down $500, $600, $700. Who cares? You just got paid, guys. You're learning how to get paid as you learn to read the indicators. And this plan gives you the highest probability chance of not only taking the correct entry, but also making some money on it, keeping your emotions out. And what you'll find is that if $300 a day is the best you can do, guys, that's 75 grand a year, and that's pretty significant. If you double it, you're at 150, right? Most people try to make between $400 and $500 a day. 4 break-even trades a day puts you in 6 figures. One that goes the distance, 1 break-even puts you at 6 figures. The goal of trading is to get paid. I think that should be cross-stitched by your grandma, put in a frame and hung above your monitor. The goal of trading is to get paid. Base hits pay bills, guys. Small, successful, high-probability trades turn into big money. But you got to know 2 things before you chase that money. You got to know why you're going to enter, and you also have to know why you're going to exit. And guys, why you're going to exit, what you're going to find is going to be the difference between okay trades and phenomenal trades. Why you're going to exit is going to keep you from holding and hoping, and it's going to keep you focused on advantages. And guys, the rules are patterns that have been proven to win more than they lose. That's why I talk about the same pattern every day. Because if you go and test this pattern, if you circle tails, if you get the perfect entry, you're going to find that it wins more than it loses. Your job over the next 30, 60 days is to develop trust in that, so you never hesitate on the entry when the rules are met. And then you've got to know what it's going to take to get you out. And I'm going to tell you guys, this is my little admission of guilt. When I went live the second time, because the first time I blew out because I didn't follow the plan. When I went live the second time, I would take the perfect entry. The entries weren't difficult for me. The idea that I had something to lose terrified me. And I would take 20 trades a day. And I would be up 17 ticks at the end of the day. I would be up 21 ticks at the end of the day. Commissions ate all my profits because I didn't have a plan for exit. I was relying on my adrenaline and my guts, guys. Your rules are going to help remove that emotion that's associated with trading, because all it is patterns that have been proven to bring success more often than they don't. And you're going to learn to identify them. You're going to learn to trust them. And you're going to learn to adhere to those rules. And the smartest thing you can ever do when you look at your chart is say, my rules are met, I have to enter, or my rules aren't met and I don't. And the difference between successful traders, people that are reaching their goals every day, and the people that struggle is the ability to do absolutely nothing when there's nothing to do. So what I just did is I just gave you guys everything that I just presented in the room. I gave you the chart reading 101. I gave you the KISS plan. I gave you the how to get to where you need to be, the exit conditions. I gave you everything. I gave you my spreadsheet. I even gave you my PowerPoint. And all of these are in both PDF and Word form, guys. And it's in that zip file that I just dropped. Grab it. You now have everything that you need. Everything that you need to be successful with the software. We learned the rules. Now it's on you to simulate and to post for feedback, guys. One of the magical things about Nexgen is that 15 hours every week. 15 hours every week. My sole purpose in life is to turn you into a chart reader, to help you identify everything that you're doing, what you're doing, why you're doing it. Is it right? Is it wrong? Does it follow the rules? Does it break the rules? So as you begin to take trades, guys, put them in the first tab of the spreadsheet. This is your trade tracking. Talk about your advantages, whether you won or lost. Focus on the feedback from class. And then go back and study it each morning. This is another one of those things that get ignored. What did I do yesterday? What worked? What didn't work? What felt easy? What felt forced? Set yourself up for the day. Focus on the goodness. Avoid the badness, guys. And there's a link in here, how to annotate to get good fast. And this was from someone in the room. Maybe she's here today. This was brilliant. Where's the market coming from? Define your momentum, and don't just say strong. Talk about the look. What does it mean to have strong triggers? Scissors open, space between, rule 1 met. Talk about your termination conditions. Write the recipe for a termination condition so you're not making mistakes. You can go back and look at these, define your entry, define your exit. Guys, that's how you get to where you want to be. Let's go to the S&P. Let's see if that 10 o'clock news does anything. Whoops. Support held. So guys, when I come back after the break, what I'm going to do is I'm going to go through and I'm going to start looking at your charts. And I'm going to talk about your charts regarding those 3 things: momentum, clear path, and entry. Whether it is a high probability trend trade, a medium probability trade, a momentum trade, an HVA trade, a jump the fudge in trade, I don't care. This is a classroom. This is a learning environment. So I'm going to go back to those 3 things every time. If you have questions about the feedback, I encourage you, present it in the room, ask me questions. Guys, I'm not going to beat anybody up, but if you broke rules and got lucky, I'm probably going to say, hey, you broke rules and got lucky. If you argue with me, that's cool. Do it respectfully. If you don't agree with my assessment, guys, I encourage you. Say, hey, Mark, you know what? This is what I saw, but don't tell me I made money, because that doesn't mean that it was the right trade. Making money on the wrong trade sets you up for long-term failure, guys. Making money on the wrong trades is making you believe that trading without advantages is the right thing to do, and that'll happen on simulator just enough to make you do it live. So that was a pretty good jump right at 10 a.m. If you tried to go short somewhere, it probably didn't work out. And guys, on a 50-50 potential to break with divergence, nobody should be surprised that these areas didn't break. Not if you're following the KISS plan. So I'll be back in 5 minutes. I'm excited. Chart reading is my favorite part of the day. If you have questions, post them. If you have comments, post them. Gary, you are a minute late, brother. If you have a picture of something that you need some help on, post it. Guys, the only way that I won't help you is if I don't know that you need help. True story. I'll be back in 5. Go stretch your legs, guys. Before we start looking at everybody's charts, remember I scroll up to the top of the chat box, we start going. I just want to make sure, you guys that are still kind of new with me here, Jim, Sid, Sean, how are we doing so far? Nanda, you guys doing okay? One of the things that I find with new users is they're afraid, they don't want to capitalize on the class's time. Guys, this class is your class. This class is your time. I want you to capitalize. I want you to ask all your questions if you have them. Right now, you're learning whether or not this stuff works. You're learning how I teach. You're learning what the classroom offers. Take advantage of it. Take advantage if you have questions. Just throwing that out there. So I'm going to scroll up to the top of the room and we're going to get going and start talking about it. Guys, one of the things that I say, and this was a question that somebody asked, is, Mark, what do you mean when you say close on the wrong side of the triggers? Guys, a close on the wrong side of the triggers. Every time a bar finishes printing, that's the close. So in all of these down bars, it closed at the bottom and closed at the bottom and 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 the bottom. And that's what creates the next down bar. If it closes up, if that bar finishes printing and it's an up bar, that's a reversal bar. So anytime I say close on the wrong side of the triggers, guys, that's what I mean. It means that it formed that up bar, everything was going down, and now I'm on the other side of those triggers. I'm on the wrong side of those triggers. So for you NASDAQ traders that are like, man, he keeps saying close on the wrong side, what the hell does he mean? That's exactly what I mean. So these bars, they pushed lower, but they never closed lower. They closed at the top and created the next up bar. This one wasn't so lucky. This one closed to the downside and it closed on the wrong side of the triggers. Does that make sense, everybody? For you guys that are wondering about this one. So live in the market, and I have this live bar, if this bar goes to the reversal bar markers and forms a complete bar, it's a close on the wrong side of the triggers. If it continues down, that reversal bar won't happen. So if your rules say, hey, let me wait for a close on the correct side of the triggers, guys, you need a completed bar above the triggers for a short, below the triggers for a long. Thought I would clear that up. Thank you for asking that. I think Tom's back at his desk. Guys, even if you ask a question in the morning, I'm still going to try to answer it. So you can always come back and look at the YouTube and go, hey, look, he answered my question. All right, Jeffrey Dean. Jeffrey Dean says, what's this new line? Why are you adding new lines, Jeffrey? That's the mid-band from your 13.2. So what that is, and I think John puts it into the workstations. If you go to your indicators and you go to the synthetic, so it will ask you, do you want to plot the mid-band from the other time frame? Whether it is the 13.2, if I want to plot the mid-band, and I click that, so watch over here. I'm going to click apply and it's going to recalculate. And my mid-band's 58, 53, 61-ish as this comes in. What you're going to do is you're going to be able to see that mid-band on the smaller, faster chart. There's traders that use it for a target every now and then, that use it as a reference point. And of course, S&P takes a little longer. And there it is right there. So now I have that mid-band from the large chart on my small chart. So maybe I'm taking an HVA trade short. Maybe I'm taking a momentum trade short from a bad top. That mid-band represents the first bounce point. I can see it on my management chart. And if you don't want it on there, all you have to do, again, is go to the synthetic. You're going to keep it. I find it distracting, but that's just me. So if you uncheck plot mid-band from the 13.2 synthetic time frame, click apply, it goes away. I'm one of those guys, though. The more I look at, the more I'm apt to get confused. It's not pretty, but it happens. Ex-wives are distracting. I don't have one of those. Don't have one of those. So guys, check this out. I love this. The market's coming off of resistance. The path is extremely clear. Every indicator says down. Momentum is strong. And Ron says, you know what? With this momentum and absolutely nothing in the way, I feel compelled for a base hit. I'm going to take 11 ticks out of crude oil. Guys, that's $110. This is $110. It happened in a matter of seconds. Guys, base hits by chili dogs. This is a trade that we actually very lovingly refer to as the chili dog trade, thanks to Ron. Because when you're good at this, you're out of the market early and eating chili dogs instead of hanging out hoping for the next trade. And guys, this is one of those trades that you'll probably see later on down the road. This is a momentum trade. The only thing that drives this trade is momentum and clear path. It is a jump in once the path clears, and it's a jump out before anything can go wrong because, guys, momentum changes on the charts all the time. This is a base hit. This is one of those times where it's appropriate to get in, get paid, get out, and wait for the next trade. One of the things you guys will see about Ron, and I know that he loves all the attention, is that when you look at his trades, 99% of his trades look exactly the same. 99% of his trades follow the exact same rules. 99% of his trades have the exact same targets. Every now and then he's got a heartburn trade in there for me. But this is one of the key components to the most successful traders I know, is they do the same thing every day, in and out. Because day trading is not about being exciting or catching every move or being a part of every jump and bump. Guys, day trading is about getting paid, taking the most highest probability looks you can find and capitalizing. And then the more you grow, the more you know. When everything says down, Pete jumps in. Once it clears, it's just a momentum style trade. And then Pete, close on the wrong side of the triggers is a loss of momentum. Pete has a different plan, but for those of you that are not at Pete's level, if you take a trade that is based on momentum 100%, this close on the wrong side of the triggers is your loss of momentum. So let's put that into advantage talk, and Pete is nice enough to let me use his charts for examples. You have to know what kind of trade you're getting into so you know how to manage it. If my sole reason for entering is momentum, losing that momentum feels like a pretty rad, that's right, reason to exit and wait for the next trade. And you don't have to do this. You don't have to do this at all. But that's 25 contracts that could have been a tiny little loser instead of a big loser. And Pete says, you know what, Mark, it's cool though, because I'm a hell of a chart reader. And once I get a confirmation bar from resistance with everything down, I'll get it back. And that's what happens when you start getting there. And I think that my hope for everyone in this room is that you get to the point to where you believe the next entry is coming so just heartfelt that you don't feel like you have to hold every trade the distance, that you're okay managing out because you know another one's coming. Gino, everything says up, odds favorable, potential to break, perfect entry, money, money. Dude, Gino. These are the ones that excite me. Look at the large chart. It's coming from a termination that reversed the market. That's amazing. That's a strong bottom. It has odds favorable momentum, and these one-to-ones have the potential to break. And Gino says, you know what? I know a little something about the NASDAQ, ladies and gentlemen. I know that if it's not perfect, I'm not going to fight those small triggers, but rather I'll get in on the close, on the correct side of the triggers to go with the momentum to establish my risk. And Gino, what a freaking amazing trade. I want to steal it. I want to steal Gino's trades because you know what? You guys can't stop me. That is the perfect entry. Actually, I'm going to put that in NASDAQ. You get NASDAQ fame, Gino. We're going to start building this one up. Perfect NQ entry. So if you guys are wondering about trading the NASDAQ, that's how you do it. Gino, great job, dude. Andy Man. No. I do that every time. 50-50, divergence prints. Man. It's not so much that it's a 50-50. Oh, you did sell up here. Okay, you did give yourself room. Whew. Andy, these throw me off. So guys, check this out. Potential to break, everything down, market's cranking. Andy says, I'm going to give it a shot from the area of resistance right here. And he gets out at trouble. What a great job. Understanding where the problem is and getting paid at it. Nice job, Andy. This threw me off. I was like, did you trade right into it? He got in at resistance. Great trade, Andy. When it's not perfect, you manage aggressively. When it's not perfect, get paid. That's the goal. Gino, we going 2 for 2? Uh-oh. Gino. Weak bottom, large triggers down, gap theory in effect, nothing but terminations. And man, Gino, you pull one over on the market. Ugh, Gino. Remember when I told you guys that if I think you got lucky, I'm going to tell you I think you got lucky? Gino, I think you got lucky. If you had tried it over here and traded up to resistance, I see it all day long. You've just gone into resistance. Your large triggers are more than a full bar away and below those 1-to-1s. And you're on the wrong side of the small triggers over here. And I know that you're on the right side of the small triggers here, but there's got to be more than that little bump. But you managed it beautifully. I think you took a very aggressive trade. You pulled one over on them, but your management was spot on. Oh, too many fibs. Perhaps he was dictating. Too many fibs, huh? So Wayne, what did it end up doing? I see a pivot, stop out, all the terminations, bad bottom. Did it go up or down from there? That's the kind of look where I start waiting for those small triggers to roll. You already had your white bar. It's just a little aggressive. Sometimes taking pictures of your rules not being met is a pretty solid plan, guys. The S&P went lower, so the NASDAQ probably did too. And then Gino, nice recovery. Took the super aggressive, dodged a bullet, and then it pulls back and heads back up. And then you take correct side of the triggers, no divergence, potential to break, and you almost get up to the area. Gotta have faith in the momentum. Great trading though, Gino. Nice job. I guess it did go up. Gino just answered our question. All right, Steve B doubling up. Let's see what we have. New users, if you have questions about what they're doing, feel free to ask. All right, Steve B, large and small, down. Okay. Not a great look into the rules. Where did you go short? Okay, right here. So weak triggers. Oh, great lesson. And Steve, you may have known what you did. But guys, we're going to talk about this real quick. Just in terms of advantages, if you guys don't mind. So on the large chart, it went up with a fight the entire way, had to break through some stuff. So on the large chart, we had weak triggers. What does that mean? That means momentum is not great. We did have a clear path though, which is awesome. I've got half of my large chart rules met, which is only 33% of them on the grand scheme of things. Guys, is everybody with me on this one? This is going to be one of those lessons that pays dividends for the rest of your life. Can you give me a why? If you recognize that the path is clear but the momentum isn't there. And if we go back to the very basic concept, we know that it's not high probability. I'm going to do this too. Having fun today. I hope you guys are having fun today. I'm going to take a picture of this. I think you guys should put one of these on your desk. I don't have momentum, but I have a clear path. Doesn't it stand to reason that I should make sure that my entry area is solid? Doesn't it stand to reason that I'm following my entry rules? Because why would I give up 66% of my advantages? And I want you to see how this turned out. Trigger lines define. Let's see if we can make this a little bigger. We're done with the large chart. Trigger lines define where the market is likely to return. There's my trigger lines. Areas inside of trigger lines define where the market is most likely to bounce. And Steve recognized what happened, but I want you guys to see it. Once your areas are on the wrong side of the triggers, ladies and gentlemen, once you are above those triggers for a short, it is nothing but a guess. It is nothing but a guess. So where do you put your stop? If your stop belongs 4 or 5 ticks above the triggers, how could you enter there? And Steve, I'm not mad at you. I know exactly why you did what you did. But I want you to see, where'd it go? Sorry. Pull back to mid-band. I'm going to go back to language one more time, guys. Pull back to mid-band. Pull back to mid-band inside of favorable large triggers. Does everybody see the difference? One defines the area of continuation inside of the triggers. One eliminates half of the words that we need to have our rules met. And Steve, I hope that doesn't feel like I'm beating you up. But guys, this is why when we talk about things in the beginning, let's talk about it in the most exact phrases, right? Separation means strength. Scissors close means weakness. Areas inside are where these trades originate. And guys, these are one of those things where if you're like, the path is so stinking clear, insist on a reversal bar. Not the threat of a reversal bar, but insist on a reversal bar. Because then at least your risk is established. Steve, way to be human, brother. I do too. I learn from my losers every day. And then this is the difference between a rookie and an expert, guys. Not crying about that lost trade, but saying, wait a minute, I've got odds favorable, the potential to break. Let me take a long trade. Let me trade up to that one. And then, Steve, the one lesson that I think would pay dividends. When the small triggers are close, see it right here? See how they behave as support? When the small triggers are less than a bar away, I wait for a close on the correct side of the small triggers. Because as long as it doesn't close below them, that market's going up. As long as it doesn't close above them, that market's going down. And this is one of the things on the NASDAQ, guys. And Steve, this is such a beautiful trade that you took. But one of the things on the NASDAQ is that this entry chart is the same size chart as your large chart on crude oil and the S&P. And these small triggers are way more powerful than they are in a 5-1. And fighting them typically get your bacon cooked a little bit. Great trade, Steve. Great lesson on the bottom. You recognize it. You understood it. You policed it yourself. Creates a great lesson for the classroom. And then this one, beautiful. Great trade. Of course, you are into a termination condition. That's where that close on the correct side helps a little bit too. Nicely done, Steve. Thank you for sharing those. Wayne. Odds favorable. Clear path on number 2 trend trade. Not quite clear path. Potential to break for sure. First one's nothing but momentum. I like it. And then you get paid. And then when it pulls back, perfect momentum trade. and you take it up to the next level. And Wayne, this is like a surgeon. Like a surgeon. Area holds, triggers roll, momentum on every chart. You hop in. Dig it. Small chart had a clear path. You get paid. Snap back. Giddy up. Wow. Gino. Directly into termination conditions. From a termination condition, all the triggers are down. Man, I like this one. Because Gino says, I get it. This area can hold. There's no doubt in my mind. I listen to Mark bitch at me every day about trading into termination conditions. But this termination condition closed the gap to the triggers. Everything stayed down. And Gino said, I could hope that that nonsense holds, or I can get in on the correct side of it to go retest that area. Really nice trade, Gino. Great patience on that entry. Awesome patience on that entry. Is it a high probability trend trade? Hell no. Is it into a termination condition? Yeah. But he waited for the reaction and then to get right to the other side. Gino, I really like this trade. Nicely done, man. Get you guys all finding your mojo this morning. Sid, where are your indicators? So Sid, do me a favor. Anytime you see this, let me do this. I'm going to give you guys a little something. And other people are going to say other things about it. This is my first go-to. Anytime I see this look, I reload all historical data, and it typically fixes it instantly. If it doesn't, I hit F5. If that doesn't work, I call Jason. So guys, there's kind of your home remedies. And if those don't work, that's when I get in with Jason. That's when I'm like, Jason, this is nutty. Help me out. And Jason will be like, cool, give me 8 seconds and you're fixed. All right, Rob, there is no setup for a close on the wrong side of the triggers. There is no setup. Are you in a short trade? Are you looking for a long trade? Guys, closing on the wrong side of the triggers is not a magical thing. It's not a trade. It's actually making you wait longer. Nope. So the only way this would be a close is if it closed up here. This was a close on the other side of the triggers. This was a close on the other side of the triggers. So you would have to have an up bar that prints to give you a close on the other side of the triggers. Does that make sense? Cool. Let's just look at one. Let's see if there's something live for us. So right now on the S&P, we're on the upside of the small triggers. Let's see if we can find something. Okay. Everything's going down. If this bar becomes a reversal bar, it becomes a reversal bar right here. That's not on the other side of the triggers. So even an up bar here wouldn't be on the other side of the triggers. When everything was going down, that close right there, see how down, 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 didn't close on the other side, closed right on the line, kept going down, and then once it closes, once that bar prints to the right of the triggers, that's what creates the push up. Guys, it's not a trade entry on its own. It's nothing more than a recognition of being on the wrong side of momentum. That's all it is. Good stuff, Rob. Thanks. Pete. This actually filled in your live account but missed by a tick here. Triggers rolled up, separated, 50-50, no divergence, perfect entry, out. Nice trade, Pete. If you had to pick an account for it to not fill in, the sim one would have been the one. And Nanda, exit here. Why? So what is the wick at the bottom of the bar? Great question. We'll answer that one. You saw the red bar on top. Right here? You have odds favorable momentum and everything's going up. I'd love to see that whole trade, Nanda, so that we can talk about it. But what is the wick? So let's address that one real quick. And I'm going to do it like this. This is the easiest way to do it. I'm going to put a box, Nanda, right around this one bar that has a wick. And I'm going to put it in the wrong spot, so I have to click on it, delete it, and draw it again. So this is my one bar with a wick. And this is why the refinement chart makes us look so darn smart. So right here is the beginning of my pullback. The bottom of this bar that forms a wick is the beginning of the pullback. The top of this wick is the top of the pullback. And then right here, a couple ticks below where it began, is the bottom of the bar. So what you're seeing on the small chart, Nanda, is the entire retracement, that fight by the small crowd. In the large chart, it just looks like a bar with a wick. And what you're seeing is you're literally dissecting that bar and seeing the inner workings of it. And this was what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is about 27, 28 bars. This is about 28 bars down to the bottom right here. And this is how we're able to refine our entries. Notice how the large chart always said down. Notice how the large chart always said momentum. Notice how the large chart always said clear path. That's why the large chart leads the way. This one really sets the tone for what we're doing. Your small chart, and this is such a great lesson, your small chart said, oh crap, Nanda, there's a loss of momentum, to which you replied, who cares? The momentum is good. And this one said, oh no, the small triggers are on the wrong side of the large triggers. You don't have momentum. To which you reply, my momentum is just fine. The large chart leads the way. But then you had to say, egads and little fishes, I don't have any areas inside of those triggers. My entry isn't perfect. I'm going to wait for a confirmation bar so that it establishes my risk. And I'm going to ride this trade down. Does that make sense? Does that help a little bit? Everything that you inside of this one bar, man, it's that refinement process. That's what allows us to reduce risk. That's what gives us the ability to really pinpoint. And can we take that same lesson and just compound it, because we're running out of pictures and this is fun for me. This is a dissection. This is a dissection, right? The area didn't break. I want you to see how fights happen at fibs. The area didn't break, and you can see the buyers and sellers going at it. Since there was a red bar across the line, no, it is nothing more than a loss of momentum. But what you can do is you can start seeing, even as you get close to this mid-band, see the little pullback? As you get close to the mid-band, that's the buyers testing the waters as you get close. As you begin to get close to resistance, you can see the sellers testing the waters as you get up there. The first couple tests get you to a perfect trend trade. But once the area is reached, They're done testing. They wanted to see how much resistance they're going to get if they unload at the key area. You come down to support. Test the waters. Do you guys see it? Hit the area. Holy crap, there it goes. Coming into resistance. Test the waters. Hits the area. I like this. I don't think I've ever really talked about this so much. Let's look at this one, 237. Not much of a test there in the middle of the night. They gave a little push and said, nope, we want this one. Off we go. And even at the fib, there's a little feeler that goes out. Those are fun lessons. I like those because this is one of the things that I don't think about. Like, I don't wake up and go, hey, what does it mean when the market scrambles a little bit into an area? But that's exactly what it means. Not as many people to push around in the middle of the night. That's true. Great question, Nanda. And I think it may have answered the other question on the other one. Cool. All right, Cindy. Cindy's man friend. Termination. Odds favorable. Maybe not 50-50 yet, but what this is the perfect momentum trade. Smalls break, snap back, take momentum there. And then, Cindy, I want you to sit down with your husband today. And I want you to say, sweetheart, when we reach a fib, and momentum is the only reason that you're in this trade, a loss of momentum is a great place to get paid. And if they retest and they stay on the wrong side of those triggers, sweetheart, get paid. Cindy, he's got to buy you pretty things. You need more tattoos. It's an outstanding trade, though. Outstanding trade. I just hate to give that much back. Everybody's different, though. Everybody's different. Just because I think it doesn't make it right, guys. Grandpa always said if we all thought the same, everybody'd be chasing grandma. Oh, and guys, here's that heartburn trade we referred of. This is not a trend trade. This is different rules. Check this out. Weak triggers at a fib. Well, it's more likely to hold. Divergence on the small chart says, hey, Ron, not only do you have weak triggers right at a termination condition, but you're also losing momentum on the small chart. This is one of those times where we love to push back to support. Why don't you grab hold when the small triggers roll and catch a little something, something. And it typically goes to the reversal bar. Guys, this is what happens when you learn to read charts. You begin recognizing patterns outside of the most conservative plan that still produce an advantage. Pete, thought I might get a home run here, but it just didn't set up. Smalls rolled, background red, large still green. Needed a large roll and smalls get beneath prior divergence. Yep, I agree. Threw you a head fake, but the large chart didn't agree, so no trade. That's awesome. Great patience. Did it ever get below? Guys, this is Pete knowing exactly what he needs to see to take a trade. And if he doesn't see it, he just doesn't take the trade. And I don't have that divergence low on crude. It's 67.45. 67.45. So Pete had divergence there. And it just never broke. So he never took the trade. That's awesome. And then I had total termination condition right here. That's all our pictures. So what do we see right now on crude oil? Let's take a picture, guys, and let's just chart read together if you want. What direction is the overall trend on crude oil right now, ladies and gentlemen? It's down. Do I have odds favorable momentum on my large chart? No, Morgan. If my large triggers are up, but my small triggers are down. Good job, Nanda. I can't have odds favorable momentum. It is absolutely, positively, 100% impossible to have momentum if the colors don't match, because the small triggers have to break above the large. And look at this. The large triggers have to be widening in the direction of the trend. So Morgan, what we're looking at is large triggers up, small triggers down can never be momentum. Ever. It's not odds favorable. It's not rule 1. Good lesson. No. Widening in the direction of the trend. And Morgan, this is why if you're jacking that one up, why on earth aren't you going and taking pictures? It's the same look every time. The only way I can ever have odds favorable momentum is if the colors match. Not only do they have to match one another, but they have to match the background. That's it right there. Pretty cool, right? Great lesson. Guys, this is why I do this every now and then. That's for odds favorable. That's for rule number 1 for the high probability trend trade. Do I have a clear path? Up or down? What do you guys think? My smalls haven't gotten through support. No, absolutely not. So let's ask ourselves, if I don't have momentum, watch this, and I'm absolutely void of a clear path, does it make sense to even look for an entry area? And Pete said it, sit on your hands. One of them's going to win, guys. One of them's going to win. But what you're doing is you're seeing the fight between key areas. Do nothing. It's the easiest thing to do. All right. Chart read. What direction is the overall trend of the market, ladies and gentlemen? Guys, if you're brand new, you should be participating. Nanda up. Perfect, because the background is green. Do I have odds favorable momentum? Do I have strong triggers? Don't jump to rule 2. Nanda says yes. Why? Because smalls are above the large are wide, the space between. That's my look. That's the best of the best. Do I have a clear path? Ooh, Nanda. So price reached Fibonacci resistance. That's the first part. Where are my triggers? Did they break? They didn't, did they? Those smalls haven't even gotten above yet. This is textbook. And then Nanda, did you notice this? I've also got 3 divergences in the same price range right here. I've got the only small chart termination and a large chart termination. And son of a gun, they're pushing lower. It's amazing, isn't it? I love it. And look at the split on those triggers. Whoa. Guys, do this every now and then. Go through. Look at your charts. What does it say? What do I see? Look at that termination. Look at that termination condition. I love these things. And man, they're still waffling, aren't they? Check this out. Rule number 2 will help you define problematic areas. Look at the fight. Belt. Let's see. I see down. I see momentum, potential to break. Is it really a weak top? It really is. Everything says down, no divergence, perfect entry, money, money. So, belt, it's a medium probability. 50% are through the divergence low, 50% are above. Remember that divergence lows can be termination conditions. So it's medium probability. You're void of a clear path. But let's do the big. Absolutely it can. It can be high probability with a weak top. When we talk about high probability trend trades, and when I give that checklist, and let me show you. That's the wrong one, sorry. When I give that checklist, is the market coming from a strong top or bottom? You can take a trade without, but manage it tightly. When we talk about the high probability trend trade, it's only 3 rules. That strong top is warm fuzzies, if you get it. But what you had was a 50-50. Yeah, that's why we're here, right? But check this out. You had a strong top, right? And then you had a weak bottom. And then price reached resistance. It had the potential to break. And that gap theory sucked you all the way back. And it continued down and got below the key areas. I love this trade. And look at that sniper entrance. But you see how that worked? Everything was going up until it hit the termination. And then it pushed all the way down to the middle of nowhere. That's a weak bottom. And when they tried to push up, the triggers didn't even follow, which means it's more likely to continue down. And you freaking nailed exactly where that trade needed to happen. I mean, like a surgeon. Cutting for the very first time. Belt, beautiful trade. Really well done. Does that make sense on the big read? Strong top sets the tone. Weak bottom says, hey, we might get more down. And you waited patiently for it to confirm the more down. And then just easy money all the way. And oh my gosh. There's things that make me just get giddy. Look at his exit. Guys, his exit is one tick above the reversal in the market. One tick. And look at his entry. The high tick for the move down. One tick before the bounce. Guys, this is why you come to Nexgen. I still get giddy. I want to meet your teacher, Belt. He sounds like a handsome man. Oh my gosh, guys, these are the trades. Hey, what's Nexgen going to do for me? That's it. Once you learn how to do it. Yeah, his wife thinks so. I'm pretty sure she drinks when I'm not looking. Great job on that, Belt. Great job. All right, term. White bar off of the term. Everything rolls and you take the short. You think I should wait here to make your entry. Exactly, Belt. Thank goodness for Tito's vodka. Cindy, your entry fit the rules, 100%. It just didn't work. That's it. Let me show you a subtle difference that for me personally helps a lot. And I'm only going to blow up this chart. There's something to these triggers rolling. They love to come back to the large triggers that roll a lot. You took the perfect entry. You took the perfect entry. When this one fails, that's my expectation. And what it is off the termination. See how it pulls right back to the small triggers, which happens to be the large triggers? That's that trade. I want to say we talked about it yesterday. Nanda was absolutely killing it yesterday. That's that trade that we started teaching in 2004 that John refined by using that white bar trade. It's the same thing. Once you get the termination and the small triggers roll, that's usually your best entry, and it typically corresponds with this. That's your first shot. When it doesn't work, that's your second best shot. I think you nailed it. 100%. I'm a little scared on how much risk you kept on this one, but great exits too. Right into trouble. Did good early, getting out of the house, gonna go. I love that. That's the other thing your grandma needs to cross stitch. Go out where life lives. Get so good at what you do that you're done by 9 a.m., 10 a.m., 11 a.m. Go play golf. Go fishing. Go out on your boat. Go do anything other than live your life in front of a computer screen. Great trade, Cindy. Great hold. Awesome exit. Your exit, you know what? I can't do it for Belt and not for you. That wouldn't be right. Look at that exit. Right before the bounce. Doesn't that feel good, Cindy? Look at that, everybody. Too cold for beaching? What's the weather up there right now? I think we're falling into the 80s and windy, but I'm 70 on Thursday. Can't wait. 65. Brr. That's jacket weather for me. I'm a Texan. Look at this, guys. It's still in the range. Rule number 2 shows you exactly where the large crowd is most likely to fight, to stop, to reverse. And look at it. Does anyone feel like there's a pretty clear range that they need to break out of before I look for an opportunity? For me personally, I probably want to get above 65-ish, and I probably want to get below 52-ish, and I want that break. I want that break. That's just rule number 2, defining edges. Love it. Look at that termination condition. All the way back to the large triggers. Remember when I said price typically returns to the large triggers? This is the gap theory, guys. Oh, look, we have a new student, Pineski. Paul's old school. Guys, there's this thing called the gap theory. When price accelerates away from the large triggers, and hits something, we'll just call it that, it's likely to close the gap back to the large triggers. This is the gap theory, guys. This happens all day, every market. What does it mean for you? It means, hey, don't try the momentum trade. Don't get in right here. Wait, let it finish what it's doing. Let it tell you that it's done. I'll put this one in the spreadsheet again. I've got about 700 gap theories, but 701 never seems like a bad idea. It's a great pattern to study. We'll call it Gaparoo. It's doing now on the ES. Absolutely, that's where I took the picture, Nanda. But it's that little patience piece. It keeps you from trying to jump in at that mid-band. So when I was learning the software, guys, all right, full admission of guilt. Full admission of guilt right here. I'm airing my dirty laundry. So when I started with the software, you guys will get a kick out of this. I don't mind telling you that I'm human. I would listen to my brother in the background, and I was like, whoa, odds favorable momentum from a termination. Oh, I can't wait to go long. This is the best trade ever. And right about here, I finally get the courage to go up long. And then I hear my brother in the background going, all right, we're trading into a termination condition, guys, and the gap theory's in play. We're probably going to drop it down to 62, 63, test that area, and that's where it's going to go back up from if it's going to go back up. And I heard that every day, Nanda, and I would get slaughtered right here, and somebody else would go long right there. And I swear I thought my brother had a crystal ball. How could anybody know that that's going to happen? And all it is just recognizing a pattern. I mean, all it is just a pattern. And it's so much fun to be able to do that. And you guys will get to the point to where you do that. And you'll say things like, let's see if we can find one here. Sorry, I'm all over the place. You'll begin to see things where you're like, all right, they tried to go up and everything was good, and there's that retracement, but look, they hit support. They're likely to close the gap and make a decision. And sure enough, they did. And then they get back to that key area, and that was the fight before it went down. It's so much fun when you start to recognize these patterns, because it opens doors for you. It really does. Still stuck. Man, but Mark, I thought it was going down. The background was red. Morgan, you still don't have odds favorable momentum. Pineski, what did you do, my friend? Paul's my hero. Paul says when everything is down, when the path is clear, and I have those two things working for me, I'm going to trade a mid-band. He traded to the fib. And this is one of those times, guys, I love a confirmation bar. I'm on the wrong side of everything. I love the reversal bar. For me, that 3 ticks from where I hope it goes, from where it went, is money, is absolute money for me. That's just me. If my entry isn't perfect, I want confirmation. Paul's been doing this a little longer. He's braver than me. Nailed it, Paul. But guys, I want you to see something. This is the exact same look. The exact same look. 100%. Honestly, the momentum's even better down here. So my job is to have the statistical advantage. My job is to take the pattern that gives me the highest chance of success. And when it's not perfect, I think the price that you pay for confirmation is worth its weight in gold. This one had momentum and a clear path. This one had momentum and a clear path. This one had a mid-band. This one had a mid-band. The difference was the fib. That's where language really helps. That's where language helps a lot. What do my entry rules say? They say an area inside of triggers. That's where the best of the best comes from. My money's worth the best of the best. That's just me. I'm going to take 5 minutes, guys. I'm going to go stretch my legs again. Walk around the house, breathe through my eyelids, probably high-five my dog. I'll leave you with crude oil. We'll see if they break that zone. They're fighting. It means absolutely nothing, Nanda. So if this negative number prints, it's a byproduct of the calculation that creates this divergence line. If it's right there and it's flashing, see how it's flashing? It means that there's the potential for divergence. Potential. So Nanda, I took my wife to dinner. We saw a movie. We held hands. We made eyes at each other. And I walked her to the front door. And right at the front door, I had the potential for a goodnight kiss. But until our lips meet, it's nothing more than potential. So don't get caught up. Don't get caught up on the flashing numbers, guys. But what it does say, Nanda, is let's say that your exit condition says, hey, if this bar prints down and creates divergence, I need to exit my position. Divergence prints on the middle of this bar that's actually active that created this one. So I know that 2 ticks below the reversal bar marker is where I'll most likely see whether or not divergence is true. So you can use that potential in a reversal bar marker to kind of help you a little bit. If this happens, I'll know about it right here. So I'm going to be ready. If divergence prints, I have to exit. Does that make sense? But as long as that bar doesn't come off of it, as long as that line doesn't print off of it, it's just potential. And I've seen potential for divergence. I've seen potential for divergence from here all the way to here. And it never happened. So don't trade potential. Let it be true. All right, I will be back in 5 minutes, guys. Go stretch your legs. It's hard to sit for this long. stretch. Here we go, last hour. Oh, they're messing with you. They almost broke, didn't they? Whew. All right, Pete, let's see what you got. Crude oil. It's teased you 4 times with that short. Can never get the large chart to agree. Just churning. That's why I don't open the small chart until the large chart says go. That is wisdom, my friends. That is wisdom. All right, guys, what do you want to talk about? That 27% divergence would have been the fear of missing out, full bar beneath the fib, but large chart didn't agree. That's it. That's it. Let the large chart lead. I love it. Something will happen, guys. I've only seen crude oil bottom out at 0 once. Let's do the chart read. Bad bottom, mid-band holds. The market is more likely to go down. In just the grand scheme of patterns that repeat themselves, 67.21 is more likely based on patterns than 67.98. Doesn't mean that it's going to happen. Small triggers are down. Large triggers are down. They couldn't complete the move to the fib. And there you go. This is why strong tops and strong bottoms are important. Guys, they know where these fibs are. They know exactly where these fibs are. And when they don't reach it, the mid-band's the most likely spot for a bounce. When the fibs don't break, guys, this is what they're looking for. This is the stuff my brother used to say that absolutely floored me. He's like, well, based on this look, we're more likely to go to 67.21. Remember when I told you you'd understand where the market is likely to go? Guys, all you have to do is wait for your shot. Some of you take that jump in, that chili dog trade. That was the perfect example, 100%. I hope you caught it if that's your trade. If you didn't, it did happen fast. But did you guys see how quickly the market rocketed? Once the sellers took control, once the sellers said, hey, we're away from that fight point, it flew. You guys knew it. Does anyone else think this stuff's fun? I love it. And once they get to 67.21, we have to see what they do. What's the reaction going to be? I don't know. Divergence, 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 termination. Now everything's rolling on the S&P. Look at the fights. Isn't that awesome? What would you like to talk about, ladies and gentlemen? I can do that thing where I flap my gums and show you a bunch of stuff you don't care about. Oh, they made the fib. Good job, everybody. I'm going to give you this one. This is for you new users. Guys, the key to all of this is having a foundation. I can't stress that enough. You have to have the foundation, guys. If you want to play golf well, you have to know the swing mechanics. If you want to play baseball well, you have to know the swing mechanics, right? You have to know how to field, how to throw. You've got to be able to take all the individual concepts and piece them together. That's what we're doing in this classroom, guys. We're building a foundation, and once the foundation is built, you're getting coaching so that you can excel with it. And let me remind you, Wayne Gretzky had a coach. Michael Jordan had a coach. Serena Williams had a coach. Tiger Woods had a coach. Michael Phelps had a coach. Guys, people that are at the top of their game have coaches. Why? Because a coach can look from the outside in. A coach isn't involved in the play. They're not involved in the game. A coach is standing on the sidelines watching everything, making sure that you maximize your potential. That's what this classroom does, guys. So for you new users, the initial coaching is I blanket you with very conservative rules. All termination conditions are bad, guys. No momentum is bad. Areas outside of the triggers are bad. We know that's not true. But until you have the repetitions to be successful with the blanket, sometimes it's better to stay on that blanket, guys. And then once you grow, you begin to see more. Once you grow, once you learn to read your indicators, you see more. Jumping in. That's not a weak top at all. That's the most kick-ass looking top ever, Belt. Odds favorable. Enter on the riptide. Exit at the 1-to-1s and the fib. I told you somebody was going to catch that trade. Belt caught that trade. Momentum and clear path. You will find a way. Belt, great job. That's that chili dog. Room to trouble. Momentum wins. Clear path. And then Belt, did you hear the lesson? Weak bottom, mid-band holds. It's more likely to go to the fib than it's not. More likely to go down than up. I love it. You weren't quick enough. Dude, it happened fast, Pete. That's why Belt was in down here, I bet. Great trade. But Mark, it's not a high probability trend trade. Of course it's not. It's odds favorable and a clear path. And I told you guys in the first 30 minutes, once you learn those two, you'll find a way to get paid. And you are in at 39 and out at 9. $300, 110, $410 in a couple seconds. Oh, I skipped one, didn't I? And there it is. What a great trade. What an awesome trade. Can anybody find anything on these charts that doesn't say it's going to go down with aggression? If you talk to yourself in terms of advantages, that's exactly what you thought. If you're the swearing sort, you said, holy shit, nothing's going to be able to stop this market when it looks like that. At least the odds are favorable. Then nothing's going to stop that market. I'm willing to risk my money. And that was it. And once he gets to trouble, I'm not giving it back. This is my money. My goal is to get paid. Love it. Love it. And then once they hit their spot, weak triggers, look at that big ugly bounce. Now we have to see if the buyers have anything in them. Termination, reversal, odds favorable, 50-50, one divergence, split triggers. This is where some people will say, you know what? That's not my best look for an entry. The only way I would even consider taking this potential to break is if it gave me a reversal bar in the direction of my trade. And you didn't get it from the area. Probably kept you out of a loser there, didn't it? All right, guys. I'm going to go mic silence until you either post or ask a question. Post a picture, ask a question. That way my brother doesn't send me messages saying, shut up and make them ask questions. So fire away when you're ready. I'm going to be drawing pictures. There we go. Belt's like, man, he doesn't get a break. RTY, bad top, mid-band 50-50. How many times do you have to see that before you believe it? Everything rolls in at the mid-band. And you got stopped out. Kurt, can you show me a picture? Rather than forcing me to go back and figure out where the heck you're talking about? Yeah, give me the picture. I'll open up gold while you're doing it. But one of the hardest things to do, it's like going to the eye doctor. I'm like, 1 or 2, 2 or 3, 3 or 4, 4 or 2. And you're like, ooh, okay, we're going to get there eventually. But I'll open gold and we'll take a look. But guys, always, if you're curious about a specific moment in the market, show me the picture. Oh, and I was going to say, guys, look at it. Bad top, mid-band holds, up it goes. Bad top, mid-band holds, up it goes. How many times do you have to see this before you start looking for this trade? Oh, somebody in gold trade. Oh, they posted in the room? Have we looked at a gold chart in the room? No, that was crude. I'm trying to think who my gold traders are. Belt was RTY. Ron doesn't trade gold. Cindy's a NASDAQ trader. Nando was looking at the S&P, I believe. Sid just needed some help. I'm not sure who it was, Kurt. Hey guys, if you're a gold trader and you posted a chart in the room, I'd appreciate it if you wouldn't mind posting it again. All right, Wayne, termination, lower divergence, odds favorable, everything says down. Perfect 50-50 trade. Got your 36 ticks, third divergence printed. Nicely done. Wayne, what a great trade, bud. We'll find it. Don't you worry. We'll find it. Was it a long or a short, Kurt? Okay. All right. Belt. Momentum is up. Potential to break. Got in early, right? 2 spots. Kind of tough look on a 50-50. You already had 2 divergences. And then it comes back to those synthetics. You re-enter. It works out great. Nice job. Wayne, you posted a good gold. Thank you. That's NASDAQ. That was the AUG trade. Hold on. There we go. Kurt, is this the one? Yep, cool. So let's do it. All right, so I'm going to show you, we're going to go through the whole thing here. Let me take a picture. Because I want you to see this, and this goes off of what Belt's been killing today too. Over here, we had a bad top. Mid-band holds. So you're not worried about this one, right? The momentum trade. You're curious about this one right here. Cool. And the thing is you didn't even need confirmation here, Kurt. Well, and that's what he's saying. He's saying when it started going back up, that was his confirmation. But what this is, Kurt, is this is just a momentum trade. This is Nexgen taught straight out of the trading guide, 100% by the rules. Trade. Mid-band behaved as a termination condition and the market reverses. This look is the potential to break. And this look on the small chart is you taking that potential to break. So this is a momentum style trade. When the small triggers break and it snaps back to that fib, the fib is actually your entry. He waited for a little confirmation. He waited for it to head up with the market. But this fib, that's your entry. And what you're saying is, hey, I'm going to trade the potential of this area to hold because of all the momentum on every chart. And literally, when I enter at this fib, I'm like 2 ticks below the reversal bar. My risk is virtually nothing because if that fib doesn't hold, it's more than likely going to fall back and become a trend trade. Does that help? No worries. This is what I do. And then oops, let's do it like this. This is the section that has the rules for it. If you want to go back and look for them and circle them and practice them. But it's kind of cool because it starts with tops and bottoms, the same lesson that you get from high probability trend trade. It relies on momentum, the same lesson that you get from the high probability trend trade. It's just taking that core and turning it into something else, a different kind of trade. So a lot of the times, Kurt, you'll see that momentum style trade right off of a strong top or bottom. So what I'm saying, Joel, and let's do it this way. Let me see if I can find it. Woo, look at that. And this is a great example. And this is gold. If I jump in with momentum right here, do you see it? And that momentum trade fails. That I get that close on the wrong side of the small triggers. When the large chart looks like this, that failed momentum trade very often turns into a trend trade. Everything starts going down. I get a close on the wrong side. When the large chart says high probability trend trade, guys, if your momentum trade fails, it more often than not turns into the trend trade when the large chart rules are met. This is one of the things that Cindy and Pete do so well. Because Cindy will say, I'll take this little momentum look. And if it fails, I'll just keep my stop where the market shouldn't go. And then when it goes down, I'll move my stop. And if it comes back, I'll put my stop back where the market shouldn't go, because this chart says that we're going down. So understanding what kind of trade you're in pays huge dividends. Let's see if we can find one over here. Just for grins, I'm going to circle this tail, and this is gold. There we go. If you jumped in on momentum, the close says, hey, your momentum is over, and it may turn into a trend trade because the large chart says so. And when you lose momentum, it may turn into a trend trade. And this is one of the things that you risk happening. If you say, I'm going to hold on to my momentum trade, this is a great example of why I get in a tizzy sometimes. If the only reason for me to be in this trade is momentum, they gave me one shot to exit. They gave me 2 shots to exit, because those are losses of momentum. And if I said, you know what? It has to turn into a trend trade. Let me put my stop here. I just took a ginormous loser, right? Wouldn't it be better to get paid, get out, and know that I'm such a great trader that I could just take this next one? But since the triggers are split, maybe I wait for a confirmation bar, and since the confirmation bar didn't happen, I never give it all back. And that's one of the reasons every day I say, hey, know why you're going to enter and why you're going to exit, guys. And this is one of the biggest challenges that people have, is they believe that every trade's going the distance. They want every trade to go this distance. They're hoping every trade goes the distance. But if I'm in a high probability trend trade, there's a set of rules to get me out of that trade, right? And I've got to learn these rules. I've got to be great at my entry, because great entries create manageable trades. But I've also got to know exactly why I'm going to get out of that trade. And guys, until you're a good chart reader, that's the easiest way to do it. You're going to focus on getting paid and protecting yourself. And then you'll begin to see stuff that may be an exit. And you'll say, okay, because I'm comfortable with these entries at such a point, I'm willing to change my plan a little bit because I know that I can find the next entry. And then you break out to that 50-50 trade, that potential to break trade. And the rules are a little different for entry. And gosh, I don't want to confuse the rules for entry on a 50-50 with the ones for high probability, or vice versa, because the 50-50 says divergence, don't take it. I would hate to miss a high probability trend trade because of one divergence. So guys, you've got to know these and understand them and recognize them and commit to them before you go to the next one, or you're likely to confuse them. And then the management is different. And if I'm in a momentum trade, it's different entry rules. It's different entry rules. It's different exit rules. So you guys that wake up and say, you know what? I saw John Novak take these 32 different trades. I saw Siva with these different charts. I saw Mark posting this wacky entry, and I saw Ron just jumping in arbitrarily. And you say, I'm going to do that because these guys are successful. Guys, those guys are successful because they have 1,000 pictures of what it takes to get in, and they have 1,000 pictures of what it takes to get out, and they know their rules well enough to manage in the moment, to be able to not freeze up. Guys, I've got 6,093 pictures in my library. That's this year. That's 11 months in. That's over 600 pictures a month. Every 30 days, I'm taking 600 pictures. That's 20 pictures a day. What are you doing to get good at this chart reading stuff? Mark, I'm struggling. How many pictures have you taken? Mark, I can't seem to catch this move. How many pictures have you taken? How many questions have you asked? How many charts have you posted? And I'm not trying to make you guys feel bad about what you're not doing. But one of the things my coaches always told me when I was playing ball or whatever was you're going to get out of this what you put into it. And my brother used to tell me, why do you expect to get good at golf if you never go to the driving range? If you never practice, how are you going to get good at this, Mark? And I was like, John, I don't need you to be logical. I'm trying to be a victim here. All right. My gold workspace is corrupt. Guys, if you ever open a workspace and it crashes your NinjaTrader, your workspace is more than likely corrupt. So what I'm going to do is I'm going to get rid of it so I can open back up. This is a great time for you guys to post a question. But if you ever have that problem, it just keeps crashing instantly. Guys, that's because your workspace is corrupt. And one of the best things you can do is alleviate that workspace from the lineup. You can always build a new one, or you can rerun indicators. I'm probably going to do a full fresh rebuild this evening. But I went and deleted my gold, so I'm going to pull NinjaTrader back up and not open gold, and we'll see if it stays open. Split triggers wait on a confirmation. What a great idea. Why? Because my entry isn't perfect. What makes it not perfect? Well, there's not areas inside of favorable large triggers, or maybe my risk is too big. Something about it doesn't feel right. Let me force a little confirmation. I love that, Joel. And just a little admission of guilt, ladies and gentlemen. I know how to fix so many things because I've broken so many things. I know how to undo damage because I've created so much damage. And if you think that you're the only person in the world that isn't a rock star trader on day one, it's not true. I wish I had a nickel for every Nexgen client that bought software and felt obligated to get rich off of it because they bought it and never did the work and got upset and quit and then came back a year or two later with a different frame of mind and said, you know what, I'm going to do the work and I'm going to keep it simple. And it works out. And then what happens, and guys, I'm going to tell you right now, if it feels like I'm talking directly to you, it's because I am talking directly to you. When you go to church and it feels like the pastor has singled you out, it's because that's your lesson, whether he knew it or not. I've seen people make a tremendous amount of money having 2 trades in their lineup. 2. But our egos say, if there's more opportunity, then it belongs to me. If there's more ways to make money, it belongs to me. If there's more moves in the market, it belongs to me. And so many people forget this one thing, guys. What's the goal of of trading? Why do we day trade? Let's put it in all caps. The goal is to get paid. Always. Always. How much do I need a day to feel good about my efforts? I don't know about you guys, just in a general consensus, If I added $75,000 to my year, to my yearly earnings, if I got a $75,000 raise, I would be stoked. I would be ecstatic. I would be over the freaking moon. Because that's a huge raise. But day traders don't think it's enough. Day traders don't think a $25,000 raise is enough, right? So they don't focus on getting paid. What they focus on is getting all the money. Rob, this one's for you. Guys, if you walk into a bank and you say, give me all the money, you're a bank robber. You're going to get tased and hogtied and maybe shot. You're going to federal prison. If you walk into a bank and say, may I have my money? And your money may be $400 a day. Guys, you're likely to walk out with that money each and every day. I'm going to drop this in the room. I sent this to a buddy of mine this morning. So my brother used to tell this to his class every day. I'd hear it almost all the time. Enough that it stuck, guys. If Elon Musk called you and said he'd give you a $250,000 a year job to sit in a room and do nothing at all, except for 30 minutes of the day when the specific rules are met, everybody in this room would take that job. Everybody in this room would be excited to have an opportunity to make $250,000 a year from doing nothing except for pushing a button a couple times when rules are met. Everybody in this room would more than likely get fired from that job. Why? Because we're our own bosses, and if we break our own rules, there's no repercussions, guys. The repercussions of not following your rules are not making money. Is there anyone that would take that job and would have been fired inside of the first week? I would have. Inside of the first week, I would have had my walk-in papers. I would have been a Walmart greeter because my ego's too damn big. Wait for the best, guys. Wait for the best. You don't have to trade in determination conditions. Doesn't matter. Don't need to. When a weak bottom dies at the mid-band, you pattern seekers made money from about right here to about right there. Guys, I am rambling like a drunken sailor right now. Getting very preachy. Don't mean to, but I've messed everything up. Some of you are saying, well, it's a termination condition. I'm going to go long. Why? Odds favorable, momentum against you. How do you initiate the trade? See you're trading with termination before it goes really bad? Hit close the second you realize it, Belt. But you know what you're going to have to fight through? You want to know what you have to fight through before you hit that close button? That little devil on your shoulder that says, but Belt, what if it wins anyway? Just hold on for a minute. But Belt, this could be the one that drops 1,000 points. Just hold it a little bit longer. I know your rules aren't met. I know it's not the best trade. But what if, man? What if? Why don't you just not hit close yet? And guys, for whatever reason, we listen to that voice. And you know what the sad thing is? It's the same voice that causes people to jump out right here with odds favorable momentum. Because the same what if voice says, Belt, what if it reverses from right here and hits your stop? But Belt, what if that momentum isn't the best thing for you today and you lose this trade? Don't you want to get out while you're up 20 bucks? And Belt goes, oh shit, yeah, I'm going to get out. And then it does everything that your indicator said that it's going to do. And right here, I sure hope it goes back down. I took the trade. I knew that I shouldn't. My rules aren't met. The divergences are there. The termination's true. But I sure hope it goes down. And Belt says, that's not my trade. And Belt, that's the ugliest freaking entry I've ever seen in my life. Thank goodness you jumped out of it. Why on earth would you enter with up small triggers 2 ticks from support when it just held? That's that fear of missing out. That was the what if guy saying, Belt, what if it breaks? Get in, get in, get in. And then your termination angel said, dude, what are you doing? Take a little hickey. Great job getting out where you got out. Great job going, this isn't right. Let me get the hell out of that trade. That's hard to do. That's hard to do. Oh, your entry sucked. You weren't paying attention to any entries. There's no way you were paying attention to an entry because you didn't have an area inside of favorable large triggers. Your small triggers were up, which means that you didn't have momentum. You're on the momentum side for the upswing. I don't think you were paying attention to your entry. I think you thought, holy shit, I hope it didn't go without me. I just saw on my chart this stupid market flow signal that doesn't mean a thing, and I believed it. Maybe, allegedly, possibly. I've worked with people for a while. I'm pretty good at having an idea. You don't look at them, then why have them? Why distract yourself with the white bar? Why distract yourself with the entry? Why distract yourself with the HVA levels if you don't use them? Man, your story's changing. Did you break that window? No. Well, yeah, kinda. I mean, not really, but sorta. 60% of the time it works every time. Right on. So what were your entry rules for that trade? Since we're talking, and you don't have to tell me. What were your entry rules for that trade? You broke them. That's cool. But the entry's interesting to me. Trying to catch the reversal. There was no reversal. Trying to catch the reversal would have been going long, right? Because everything said down. It's all right. I'm not mad. And guys, I'm sorry. I feel like I'm cornering you, Belt, and I don't mean to. Let's go to Joel's. Joel. You ready for language? Termination condition, right? Not a 50-50. That's directly into resistance. Absolutely no triggers broke. Do you see it as a termination condition? Yep. Do you see the termination condition that's also the gap theory, the large triggers below? Okay. And it's from a bad bottom. And it's okay. Guys, sometimes we get bored and we do stuff. I've done it. Man, I've done it. And then the most important one is let's talk favorable large triggers. What does it mean to have favorable large triggers? It means that both the large and the synthetic are one on top of the other, overlapping, snakes riding piggyback. That's favorable large triggers. That's a mid-band and a fib inside of large triggers at a termination with the gap theory. Your synthetics are 3 days below. So they can't be favorable. And guys, you have to take these charts and you have to take these pictures and you have to take these trades as you're learning, because Joel, once you post it in the room, all we're doing is we're confirming the lessons, right? The things that you already know, but until you trust them 100%, guys, it's okay to take these trades. It's all right. Do it on simulator. Practice. Get good. And let me tell you the truth. Of the last 40 charts that Joel has posted in this room, 5 or 6 of them don't really follow a plan. And that's normal. That's pretty good. I don't know, Joel. I don't know. Every time you talk to you, pretend like you're talking to your grandkid. Right? Who'd call their grandkid a dumbass for trading into a termination condition? Who'd tell their grandkid how stupid they are because that's not favorable large triggers? You would never dream of it. Never dream of it. But man, we'll beat ourselves up. And that's it, Nanda. It's a great example. And the loss just helps cement the lesson. Guys, talk to yourself like you're a 4-year-old. Good job. Good try. Here's where it went wrong. Let's get better. That's how you get to where you want to be. I've never been pissed off at anything and done well with it when I'm angry and emotional. Just stuff to think about. Stuff to think about. It's all patterns. And that's it, Joel. And I'm telling you, it takes courage to drop a loser in the room. It takes an enormous amount of courage to drop a loser in the room. Because what are you doing? You're saying, hey, I'm not perfect right now, but I want to be better. I'm not where I want to be, but I'm getting closer. Guys, I'm such a hippie. I really am. Of course you did, Nanda. And you want to know the truth? You guys will have days where you've had 5, 6, 7, 8, 9, 10 winning days, and your head's going to go so far up your ass, you're not going to have any idea what just happened. I've done it. And that's where you have to resort back to the rules. Pretty cool, right? Termination condition holds 1, 2, 3, 4 divergences straight from that fib. Patterns suggest that you're there. At least the feeling helps you get back out quickly. It does sometimes, yep. Sometimes. Guys, all I do is I tell you what you did right or wrong, and then we work together to find a solution. And Belt, that was my biggest thing. Awesome, Joel. That makes me happy. Thank you for that. That was my biggest thing, is I hid all of my trades from the room when I started. My brother ran the room back when I first started reading indicators. Started working. I didn't work for Nexgen. I was working with Nexgen. I was trying to become a day trader. And my brother told me, and gosh, I thought he was just trying to put the screws to me, being an asshole big brother. He said, Mark, I'm going to tell you right now, I want you to write down your rules. He said, I want you to write down what it's going to take to get you in a trade. And he goes, oh, by the way, here are the rules. Write them down. He goes, and then Mark, what I want you to do is I want you to go find 10 pictures of the perfect long that fits the rules, and I want you to find 10 pictures of the perfect short that fits the rules. And if you can't really find the rules being met and complete, because you're new, right? And new's okay, Mark. Here's pictures of what it looks like to make sure that your rules are met. He goes, and once you recognize this pattern, I want you to practice it. I want you to go try to catch it live. And it's going to be hard. The market's going to feel like it's moving really fast. But what I need you to do, Mark, is every time you take a trade, I want you to post it in the room. Because I can't keep giving you private sessions on the side, on Skype, because I'm trying to teach a room. He goes, so post it in the room, and we'll talk about it. He goes, but the thing is, all those pictures, get them into your spreadsheet, right? Make sure that you're paying attention to what you're doing. Make sure that you're going back, that you're studying it, that you're committing these looks to memory. And I'm telling you, my brother gave me the exact same path that I present to this classroom every morning. And what happened, and you guys probably gather this just from being in my room, is I'm too effing smart to follow rules. I'm too freaking smart to take pictures and post in the room, guys. And when I posted in the room, I only posted winners. Because God forbid a Novak posts a loser. Heaven forbid I'm not great at something right in the beginning. And guys, I wasn't. I sucked. And then I got lucky a few times without posting in the room, and I went live. And guys, I was 30 days in. I had just had spine surgery. I was probably still on painkillers. And I thought I had this dead to rights. I had never taken pictures or gotten feedback, didn't have a plan, didn't know why I'd get in or get out. And this is the Mark Novak story, guys. I lost $5,000 in about 2 or 3 hours, 21 trades. I still remember it. And you know what the worst part about losing all that money was? Is I had to go back to John Novak and I had to say, you might have been right. Actually, the hardest thing was telling my wife that I just lost $5,000 in 2 hours. She's like, I hope there were hookers and blow. But guys, I had to go back and I had to start over. I had to feel all the beating. And I had to admit that I didn't know what I was doing. And then I had to regather, guys. And then I started following the plan. And I started taking pictures and I started presenting in class. And it's when I started presenting in class that I found out that I had a tendency to trade in determination conditions. And when I started posting in class, I realized that the gap theory was killing a lot of my trades. And guys, once I started posting in class, it started to make sense. Once I got that feedback, it made sense. I didn't know what I was doing right or wrong. And I'm kind of at the I did it stage now, and you will be too. But guys, the plan is real. The path is real. And the simple plan for consistency simply says, don't trade in determination conditions. Don't fight large triggers. Define your entry. And I know that sounds all, oh, campfire, kumbaya. But guys, I'm telling you, I've done everything that you're in the process of doing. I've broken everything that you will ever break. I've fought every indicator that can be fought. And I've learned how to fix it. And now I take that so that I can help you guys fix it faster than it took me. I spun my wheels for, I would say, at least a year and a half. Spun my wheels, wasted a lot of time. Termination condition. No matter how much you love momentum, it's a termination condition. Just saying. Whew, good class. Sorry, got on a soapbox there. So if you're feeling like you're the only person, you're not. Someone said to me once, I love it, Joel, everybody's done the same. Somebody said to me once, they're like, well, you're so good. I mean, we post a picture and you're instant, right? We post a picture and it takes you 2 seconds. Guess what, guys? I'm not worried about losing a trade or winning a trade. I'm not worried about anything. The only thing I'm doing when I look at your pictures is there momentum, a clear path, and an entry area. That's it. Is there momentum, a clear path, and an entry area? That's it. Guys, I'm good at this. Is there momentum, clear path, and an entry area? My job's easy, guys. My job is so easy. And that's it, Belle. That's it. You remember when your parents told you don't do that? Your dad told you, hey, you're going to want to watch your mouth at school. Someone's going to knock you out. My dad actually said that. I was a smart ass. He goes, you're going to want to watch your mouth. Someone's going to punch it closed for you one day. Well, somebody did. And then you have a choice. You either learn how to watch your mouth or you become a better fighter. But guys, there's this experience, right? There's this experience that comes with it. I did both, Belt. I got punched in the mouth quite a few times, so I became a better fighter. You get momentum first, then clear path and entry area. That's it, Joel. Order of operations. I have momentum. I don't have a clear path. Let me pause. It's the pause that's hard. It's the pause that fights the what if. And Belle, I don't know how old you are, but when I was a kid, you fought. That was it. Kids fought when I was a kid. And it wasn't always angry. Sometimes you fought just to see who could fight better. That's the kind of neighborhood we grew up in. Some fights have to be fought. Not trading, though. Let the large crowd. Doesn't it, Joel? Why? Because you refocus on your rules. After a rule breaking, you're more focused on your rules, right? Every time I break a rule, guys, I'm forced to go back and study it. That's part of my plan. That sets me up for the day. That's what sets me up and gets me in the position to maybe not break that rule today. And look at that. Everyone's saying, but Mark, that was the perfect long. And that's exactly what your brain tells you, but it wasn't. Because it was right into a fib. Pretty cool. Sorry to get preachy. I guess that's it. I can't talk for 45 minutes straight, so we're going to call it. I'm going to kill